stock market, I'm sorry, crypto markets, you got to be able to convert it into something else. And the reality is when we go into hyperinflation, and we'll see what happens. I mean, there are some new players in the field. I don't know how that's going to play out. Nobody does, because it hasn't happened yet, ever. But we know how it plays out with gold and silver, because they've been around for thousands of years. They have the broadest base of buyer, the greatest level of functionality. And when you need to sell something, what do you want? You want one buyer, or you want lots of them to compete with it? I want lots. Fiat money versus spot gold. Now, when you're listening to mainstream TV, what they do is they refer to this as gold. But these are simply contracts. And their function, really, aside from the trading function, but their main function, the reason why they were really created, was to manage your perception on gold. So they can create out of these contracts as much gold that does not nor ever will exist as they want. But this was back in June 29th of 21. Gold heads for worst month since 2016 on dollar strength. Really? Gold wavers as traders weigh Fed tightening path. In other words, since gold does not pay you interest, their theory is that you will gravitate to something that does pay you interest. But they pay you the interest in fiat money. In the U.S., it's dollars. Gold fluctuated, hovering near little change as investors weighed the Federal Reserve's monetary tightening path, raising rates, and a surprise contraction in the U.S. economy last quarter, which we talked about. The economy shrunk 1.4%. Now, have you noticed how many times the word surprise has been for the inflation numbers, the GDP numbers, for all of these numbers, the PMI numbers, for all of these numbers? So these brilliant economists cannot see this coming. They're surprised by all of these things. That's garbage, but I think maybe they are surprised, in which case, why are you listening to them anyway? Now there is so much even more manipulation. Why? Because a rise in gold price is an indication of a failing currency. And once you realize that the currency is failing, you make different choices. I know I've made different choices. How about you? Can you see this major pattern shift? Over time, going all the way back 6,000 years, an ounce of gold would always buy you a man's suit or anything else. So yeah, you can have the manipulation in the short term like we just were looking at. Spot gold, which is an easily manipulated contract. Now we're talking about the physical world and part of the spot world too. But I'm telling you right now, without any doubt in my mind, no doubt whatsoever, gold, the true value of gold against fiat currency, against the US dollar, is severely suppressed. But let's take a look at that. Because what we know for sure, history has shown us over and over and over again, gold holds its purchasing power. You can see this massive decline because that's the way the fiat money was designed. This is now based on debt. And when you have debt, you have interest on that debt. And so this is all of the things and more that create that inflation that has an impact on your purchasing power. I mean, this is not rocket science, but it is on its, you can see that the dollar's value, purchasing power value, has been on a relentless decline to zero. Unlike what we saw with the really strong dollar. This is the one that is most important to you. And this is the one that has shifted its pattern. And that loss of purchasing power is severely speeding up. It started when the inflation started to kick in That is a pattern shift. That's one of the reasons why I do believe that we've started the hyperinflation. We still have some opportunities to get into proper position if you haven't, but can you see why you don't want to waste any more time? If you've been procrastinating or putting it off or what have you, that is not a really good thing to do, because I don't see this magically changing no matter how many times that we say that, because it's all about confidence, right? Fiat money products can only protect purchasing power as long as they appreciate, so they go up at the same or faster rate of the real inflation, not the garbage government numbers that they massage to make them look away so that you go, oh, okay, well, there's not much inflation, even though your personal experience is telling you differently. Is it your personal experience that we have 8.5% inflation? Or when you go to the grocery store, you're seeing that 40% inflation? Or when you go to rent or buy a house, you're seeing that 20 and 30% appreciation. It's not appreciation, it's inflation. So those prices going up, not because the value of those things have gotten that much stronger, but rather this is why. It's because the purchasing power has gotten that much weaker. And once all confidence in this system is lost, that's when you will see the major hyperinflation. And once that confidence is lost, it's not so easy to get back again. So any wealth that you hold that you can only convert into fiat money, trillion times zero is zero. Gold primarily needs to be the foundation of your portfolio, because it's the only thing, the only financial asset that can really protect you. Because the beauty part about gold is, yes, there'll definitely be cases like, to say, pay your property taxes, where you're going to have to convert them into US dollars. But what we know is that this will appreciate once the government, once the public has lost all confidence in the central banks, we go into hyperinflation. You will see the price in terms of dollars in this country or wherever you are in the world. You're going to see that reflect the loss of confidence. So in Venezuela overnight, the first time they did their overnight revaluation went up 3,500%. Is that what you think is going to happen to gold? Because, I don't know what percentage it's going to move up.